right. Well, welcome once again to Trillium Plain Talk. I'm here as usual with my partner, Matt Gomoll, who heads up our investment efforts here at Trillium. Matt, today we're going to talk about the AI tech bubble or not bubble. I'm going to warn you, I'm a bull. All right. I'm a big believer in what AI is going to do for us economically, productivity, and I don't see it as the same bubble from 2000, but I guess we'll hash that out here today.
Yeah, definitely. Yeah, this has just been a huge topic lately, all over the news, especially the financial news in the last really month or two, of questioning whether it's a bubble, what the spending on it is, how it's financed. All that stuff has been a huge topic, and it's made it into kind of everyday conversation. Like, I'm finding myself having conversations in my friend groups, asking these questions, and everybody's got an opinion on it. So thought it would be a really pertinent topic to today.
Yeah. So where do you want to start?
Yeah. So I think starting with with CapEx, so capital expenditure, the magnitude of spending on the AI, just the entire ecosystem, is tremendous, right? We're talking 400 billion plus this year alone, with projections that it will go to the 1 trillion number annually in the next probably 4 or 5 years. We're seeing a lot of these giant companies, right? The Mag 7 that we hear about, the mega tech companies are all investing in this, whether they're making their own AI models or they're just building the infrastructure to provide it. There's just a ton of spending. It's across energy, building an infrastructure, the chips. All of these things are part of what is going on. And so whenever you see that kind of spend, people are reminded of the last major technological leap we have, which was the dot-com era, right? The transition to the internet was the last major technological boom cycle we had. And then the mobile phones kind of in the 2010s was a similar one, but smaller. So yeah, that's where we're at today, with just a ton of spending. Companies are getting priced up because they're involved in that AI ecosystem, and investors are starting to get a little worried about it.
Yeah, and traditionally in markets, like particularly with investor money, right? Normally we're looking at things and saying, we're doing some multiple of profit, for lack of a better term, be it EBITDA or something else. We're in some level of multiple on that, or even aggressively doing a multiple on revenue, but because there's underlying profit. And like the tech boom, like right now, you have people that we're investing massive multiples, either with no revenue or 100x revenue, right? So it's hard for your traditional money manager to put it through their system and go, here's where I see that. And that's where it's very similar, I think, to the dot-com and what happened to the dot-com bubble. But let's not bury the lead. I mean, the dot-com thing worked out for us, right? There's a lot of productivity and stuff that came that there was a bubble, and then it worked out for us. And there's just a big part of me now that thinks that I think the smart money always has learned from mistakes, right? So while the money may be being spent the same, a lot of things like AI is having instant impact on productivity, whereas the tech companies of the past did not. It took a while to see that productivity, but most times when AI is being launched, they can very early in the cycle see the impact on productivity.
Yeah, and that is, the dot-com bubble was also, there was a lot of these, you put .com in your company's name, IPO, and you get just tons of money in the capital markets. And that was a problem. Those were unprofitable companies. Pets.com didn't need to exist, right? Like, these kind of things were silly in hindsight. But also along the way, tons of fiber optic, tons of just cable being laid in the ground to support the future internet. Well, years later, that turned into an asset for Netflix to take advantage of, right? The streaming revolution that we had came about because we had all this capacity of communications technology built already. Now, the dot-com companies didn't profit from it because they were a little early, and that the investors hyping those up were a little early. But our current ecosystem of the internet is based off of that foundation. Now, could we run into that again? Yes, maybe. To say that the infrastructure build for AI is excessive when we're talking about hundreds of billions of dollars, maybe. But at the same time, these data centers are being utilized, right? There is not spare capacity in data centers and in compute yet, right? Now, 5 years, if we keep at this pace, there might be, but it is the big difference that I see is this is being funded by the biggest companies. The Meg 7, Microsoft, Amazon, Google, these companies have created some of the most profitable, just cash generating machines in history. And they're using that cash flow to build out this infrastructure because they feel like it's an existential requirement, like they can't get left behind. Now, could they be overspending? Yeah, sure. Well, they still have just fantastic businesses that are going to keep printing cash for the next years to come. So even if they overspend and become less profitable than they are, in 2023 or 2024, they're still fantastic companies. Whereas during the dot-com bubble, it was a lot of that spend was generated through companies who were IPOing at very questionable quality businesses and valuations. They were spending money on Cisco's servers and Cisco technology, which drove Cisco up. But once those kind of crappy companies just started falling off a cliff, well, Cisco dried up with it. So it's kind of like a very different model of who's doing the building and where that cash is coming from to spend on this stuff.
Yeah, so I want to be clear in case people read something that contradicts what you just said, because what you said is very accurate. But you and I spend time at investment conferences learning about what new money managers are doing out there. And we were at one last week. And they even talked about, Meta taking on debt and things like that. However, all things are not created equal. So there's business reasons and shareholder reasons why some of these big companies are using credit versus cash, but it would be the same as if any of our clients out there, have a couple $1,000,000 in their investment account and they have a $40,000 car loan, right? It's like, could pay it anytime I want, right? And that's kind of what you just described, so that everybody knows out there. If you see that they're taking on debt, the debt to equity ratio is ridiculous. Like they could just write the check right now, and they're doing it, some to keep their powder dry and some to keep shareholders happy.
Yeah, definitely. And that gets into the next segment on how is this stuff being funded, right? So along with the headlines of, is this an AI bubble, you're going to see stuff about private credit, right? If you watch CNBC, Bloomberg, Fox Business, you'll see it interspersed with the other topics of the month. And so, yeah, there is funding for these data center buildouts that's happening in private credit world. And to some extent, there was a famous one recently where Meta did a joint venture to, get a $30 billion debt offering to build out a data center, because apparently that's how much it costs. So yeah, they both have the early financing 23 and 24 of AI CapEx was a lot on just cash flow. And now they're moving into debt to some extent. But I'll give you an example. Recently, Google and Oracle both issued billions of dollars of bonds. So Google issued $25 billion of bonds in November. $90 billion of orders showed up to buy that 25. In September, Oracle, which is getting into the cloud provider and the kind of compute provide services, they issued in September $18 billion of bonds, and $88 billion of orders showed up for it, right? So what that's telling us is there is a lot of investor appetite for these bonds, right? If Google and Oracle and Meta and whoever else want to issue bonds to fund part of the CapEx spend, there are going to be investors lined up to buy those bonds because they believe that those are good creditors, right? They believe that Oracle or Google is going to be good for repaying those bonds.
Matt, I would say, and if it hasn't happened already, and it probably has to some extent, but I think it's going to happen in a big way in the next 4 or 5 years. Um, I would bet the government's going to get involved in spending money on this as well, because this is real infrastructure, and we're literally in a competitive situation with China, where their government's spending money on AI. And I think when you look at the infrastructure, so that should be exciting for a lot of American workers out there, by the way. Like, AI can't build their own data centers. And to your point earlier, like, I don't know when capacity is going to be like we have too much, because right now that is a problem. Like, they don't have enough capacity to keep up with the technology. So there's going to be building, there's going to be infrastructure. And if I had to bet, I actually do think the United States government and state governments will get involved, and they're going to look at certain things with AI as if it's part of the grid. Because candidly, I'm not sure the grid is not going to have to be updated and expanded out of this. So when you have all of those kind of tailwinds in where, like you said, investors are showing up in droves to invest in those credit facilities, the biggest companies in the world are deploying their cash into this. And eventually, I do believe the US government's going to sit there and deploy real dollars into it, as opposed to tax rebates. But even tax rebates will certainly, certainly are economically viable. But I actually think you might see the government come in and go, we are building bigger grid system, right?
Yeah.
Which is going to be a part of the problem.
Right. And that's what we are seeing, how much energy this stuff takes, right? So how much energy a data center takes, how much water it takes, all these things, right? And that, I would say, 2 years ago wasn't quite known. Nobody really quite knew the scale that was going to be required, and the energy demand, and the way that might drive up local energy prices. And that's going to be politically unpopular, right? Like, if your water or power costs are going to go up because a data center got put in, you might vote against it on the local council, right? But what I think that, the government realizes that data, or like the AI race, isn't something we want to lose. And so, do we need to have government money go into building out even more energy infrastructure so that we keep costs down for consumers, while also giving the consumer, the normal citizens, plus the data center, the power energy that they need? I can certainly see that. I think, and it's a great point of distinction to look at. There wasn't a government reason to say, oh, we need to prop up the internet boom of the late 90s, early 2000s. There wasn't, right? Like, the government already had the internet. They created it in defense labs, and they were using it for what they were using it. But it wasn't such a thing that they needed to invest in. This, however, has geopolitical and national security implications. So it's like you have a technology and a ecosystem spend that also has major government implications related to what we're doing versus what China's doing, and not falling behind. That's a pretty good floor to put under a technology like this.
Yeah, I think, and this may not be a topic for today, but it's something that turns in my mind again, where I said I'm a bull for AI, right? And I'll get into more of this in a little bit, but um, particularly here in this country, like, we are programmed to think that all problems are solvable. Like, we really are. Like, the United States is a country where it's like, if we have enough time, like, we will just fix that problem. And so there's a little bit of a euphoria with AI that it'll solve its own problems. And energy is one of them. And I even hear people, they're very euphoric about, well, I mean, AI will figure out how to not use as much energy, right? I mean, AI will figure out how to generate that energy more efficiently. Some problems aren't solvable, right? Like, at the end of the day, it's like, it doesn't matter how much, supercomputing power that you put out there and how much brain power you put behind something. It just might not be feasible that, you can run the entire US grid off of an A battery, right? No matter how much brain power you have. And so that's something I'm not necessarily afraid of. I am more afraid of what you just pointed out, the kind of competition for using those energy resources. But then, that's when people kind of get to come forward and go, well, great that I can put stuff in Chat GPT, but my house is freezing right now.
Mm-hmm.
Right. Or my house is hot right now because there's rolling blackouts because, there's AI running everywhere.
Yeah. And that is, I have been making this point for almost a decade now that we fell way behind on energy production. And that gets into ideological and political reasons around how energy was framed and climate change and the political divides over all of that. The truth is we need a lot of energy. We always do. Any country that's trying to grow needs more energy than it did last year. And we need all of it. I don't care if it's wind, solar, nuclear, preferably not coal, but natural gas. Like, we just need more energy generation. And I think people are waking up to that and just saying, hey, all of it, like, let's do all of it. And the government has a role in subsidizing certain things or giving tax breaks or incentives to companies to build certain types. But we just need more energy, period. And that will be, it's kind of an abundance thing that we hope to move towards. Now, I do think there's an aspect of efficiency, right? Part of, there's some talk out there about how our model of approaching AI is very brute force. Get more and more compute, throw more resources at it, build bigger models. Whereas China's model is to do it a little more smarter. Like their DeepSeek thing was, they did more with less. They did it cheaper. They did it with less energy, all these things. They did it faster. They kind of they take a model and then they train that model to do other things and build other models for them. So there is an aspect of this where we can get more efficient, right? Like maybe the next generation of chips is more efficient. Maybe somebody comes up with better cooling for data centers, so it uses less water. Maybe they use less energy. Maybe the models themselves are a little more energy efficient. And then we also just build a whole bunch more energy. But like, that's, it's potential that we do see improvements across a bunch of areas. So the way things are running today aren't necessarily how they're going to be running in the next 5 years.
Well, two things. And the first is just a quick point. Like, again, what I want to, and this is my personal opinion, right? We know what China lets us know, right? And
Mm-hmm.
so I think a lot of times, like, there's a lot of stuff that comes out of there about how great they are. That's what they're telling us, right? There's always a cost, and they're not nearly as transparent as we are across the board, right? And we're not in their stuff as much as we are. So they do a lot of things, but they do it often at the cost of their people, right? So I don't know about that, but I do want to talk about productivity because that's where I'm really a bull. So a couple things that you talked about, the need for energy as we add more people and all these things to the earth. Well, that's always been kind of a double-edged sword. Like, there's a lot of people have always said, man, we can't keep populating the earth. And then the world looks and goes, economies would dry up if you weren't creating more people. But creating more people is about creating more productivity and more flow through things. And developed nations, birth rates continue to go down. And whether people are like it or not, you can just look historically. The more educated women got, the less babies people have. So in countries where women go to college and have all these things, and it wasn't that long ago, it was only the 50s in America where that was, not the norm. But today, every time you do that, families have gotten smaller and smaller because lots of times both people are working. They want to spend time with their families. Fathers are engaged at a different level than they used to be. So population has shrunk, or the growth of population has shrunk. This is why I'm a bull on AI, because if AI can create more productivity without us relying on so many humans every year, that's a good thing. You can have a lot of great things happen in the world, and you can have economies and the world continue to develop. I hope that people come forward with the right process. You and I are two owners in this business, and in our own business right here today, we're trying to use AI to make the lives better of our team. We don't sit around, you and I and the other partners, and go, geez, who can we cut? Right? We've actually gone out and incorporated AI and said, how can we make so-and-so's life better? How can we make their workday better? How can we pay them more money if they can do more stuff? Right? So I don't think everybody will operate that way, but if a lot of folks operate and take AI in and go, we're going to use this for productivity, where the people that work for us can be more productive during the hours they're there. Therefore, if they're more productive, we can pay them more money and they can still live this great balanced life. This could be a really wonderful thing. I know there's always, What if it displaces jobs? But what I'm seeing right now is job creation on data centers and all those things. And, Matt, I don't know. I know over the last 6 months, I've seen increased productivity in our firm using AI. And it hasn't made us ever have a conversation of who do we get rid of, right? It hasn't done that. It's actually been, we were like, great.
Yeah.
We can pay them a bigger bonus this year. They did more stuff for us.
Yeah. And that's where this thing gets interesting is the points you're making of we are coming off of the biggest generation being the baby boomers, right? As the baby boom generation leaves the workforce over the next 10 years or so, we have less workers to backfill them, right? And so that was already a concern out there. Now, the US is a desirable place to be. We can turn on or off the immigration spigot of deciding how many people come in or out. Immigration, though, is slowing, right? So we have a shrinking population or shrinking workforce and immigration slowing. You would look at that and say, oh my gosh, like we don't have enough workers, our economy is going to shrink. In steps AI and it's not fully baked yet, but over the next 10 years, as it keeps developing, it's coming at a really great moment that it might be, we were going to cut that job or we were going to cut that job due to productivity growth, but now there's not even an employee that was needed to backfill it. There's nobody in the labor market that needed a job because the population shrunk. And so there isn't that job loss you'd expect with that level of productivity gain. The other area, right now, the entire AI conversation is focused on the big companies, right? It is who is building out AI, who is building the models, who's building the infrastructure, all that. It has yet to percolate across the economy. Now, when that happens, and that still could be years away, where we, like you said, we're seeing improvements, we're using it, we're trying to make our people more productive, and they are, which increases our capacity, which is great. But as AI gets into more and more industries at a daily use level, think of like spreadsheets, Word documents, email, right? These were areas where people had jobs who were just, typing stuff and typing out memos. And now we made them way more productive with a Word doc and email. We made people way more productive with spreadsheets. And it's going to be hard. The younger generation is actually going to get way better at this than, you or I trying to adopt AI into everyday activities. We have an older mindset of how to use this. I heard this example yesterday on a podcast. It was talking about like a Gen Xer is going to use AI for search because they know search. Yeah. And a Gen Z person is going to use AI as like an agent of, instead of like typing a search question in, they're going to use it as an agent to do some work. Like they're two different ways of doing things. And it is a matter of, we need to see what comes next, because there's going to be a lot of really productivity enhancing things. And when that gets down to the small business level of Main Street businesses able to be more productive and more profitable, that's just great for everybody, right? And that doesn't necessarily mean they have to fire more people. It just means, hey, we've got a team of maybe, Main Street business has a team of 5 people, and they, finding good quality people to do that job might be hard, but they can just take on more jobs, more work with the team they already have because they're empowered with extra tools.
Yeah, well, I feel advanced here as a Gen Xer. I mean, so I have to force myself to use it. And, you and I are both guitar players. You're much better than I am, but I always give the example of when you're learning to play the guitar, the simple chords of G, C, D feel very, very difficult. And then after it's literally a week or two, it's pretty easy, right? And so that's always my mindset when I'm trying something new, like Steve, power through it. But I give an example of like not using AI for search. We have a new hire coming on soon. It's a significant position in our company. And I had to write at one point a job description for them and develop an offer letter. And it is literally something I hate doing. I've always hated doing. And it's normally something that I would have procrastinated. I might have procrastinated so long we didn't get to hire him, for goodness sake, right? I'd be like, I'll do it later. I used AI. I'm just like, let me try this thing. And I just talked to it. and said, I need this job description for these. I have three different things I want the young fella to do. And it's like this, and I need the offer letter to look like this. And I talked to it for 35 seconds and it generated everything. And I went, oh, I'm in heaven, right? Because that's how I want to use it. Like I don't want to be the Gen Xer going like, because people don't realize, like, I mean, AI is built into your search bar half the time now, or your like just the bar in Google, right? You just type anything in there, and it is using it. So you're just using it that way. It's like that's just an advanced search engine. So I do, as a Gen Xer, try to force myself to go use it, like just talk to it and have it do it this way, have it do research for you this way, have it generate something for you this way. So long way for me to self brag about myself as a 58-year-old Gen Xer that not just using it as a search engine, my friend. Yeah.
Nice. Well, and that's a good example of something that was, it was important for the business, but it wasn't a core function of what you needed to be working on. And so
That's
you
right.
just needed to get it done. Great.
Yeah.
If AI can help knock that out so you move on to the next thing that's way more important, awesome. So yeah, there's a lot. I think we're still in early innings now. Another good framework that I've heard is, instead of framing it as a bubble, framing it as boom and bust, right? So different industries, as they get built out, go through boom and bust cycles. And it was kind of around that framework of, could there be overspending by companies that then don't benefit from it, but the next generation of companies do? Yes, that is boom and bust. That doesn't mean it's a bubble. It doesn't mean it was, purely speculative activity. It was productive activity, but the company, to capitalize on the infrastructure built, you didn't make revenue fast enough, right? Like, and that's going to be a problem. Now, certainly there are areas of the market. I'm not so worried about, whether Nvidia or Google or Amazon or, these companies are in a bubble. It's also important to remember, like, Amazon fell 50% in 2022, so like these companies, as big as they are, still have volatility to them. But is there, risk in, it's more so in the private markets today, honestly, in the venture capital space of, unlike the .com bubble where anybody could throw .com on their name and go public, there's not a lot of that activity. There's not a lot of bad companies, poor quality companies going public to capitalize on this. Are there some in the venture space? I'm sure there are, right? No doubt that people can get funding from venture capital with throwing AI in their name, but it's a very isolated corner of the market.
Yeah. And I guess, so here's what I want to caution all investors on, not just ours, right? Like you talk about hearing it all the time, and it's not just because you're in the business, right? I mean, it's omnipresent right now. Everything that's going on with AI, you'll hear it on every news station, everything you pick up. And so what I want to caution folks on is, and look at the way that we do things for our clients. So when you and I were looking at different investments this last week, and we looked at different private credit investments, for example, like you as the lead and me as part of your investment committee, we would never say to a client, hey, we invested in this credit investment that is only lending to one AI thing, that is this kind of startup thing over here, right? It's the same level of diversification. We're looking for money managers that specialize in these things and go, well, we are putting dollars across all of these things, right? I think with it being omnipresent is the risk of, it's like, we have plenty of clients that have done well and done poorly in things like, and we're not big at putting Bitcoin in portfolios, but we've been like, okay, it's your money. If you're going to do it, do it. Bitcoin is omnipresent and people bought it at 125 and now it's at 85, right? And they also maybe bought it at 60 and it's at 85 or 20. So if their experiences, I think what I caution all people of is, don't buy into the euphoria with your serious money. But if you go to a good financial advisor, a good wealth manager, they should be selecting investments for you like they have in any other time you've invested, that are actually saying, this is why diversification is important for money, that it's more important that we don't lose than we gain from, right? Which is most people's long-term money. They've earned it. They've worked really hard. And so that's my biggest concern for people out there is they get, because we see it all the time, right? A lot of people will brag to us about, they'll show us their account. I bought NVIDIA and look at the markup, and I'm looking going, okay, but thankfully you didn't put all of your money in it. I mean, you might be rich on that, but you probably bought some other stuff you're not telling me about. And inevitably they did, right? And so I think that's one of those things I caution people on is, as they're looking at AI out there, there's going to be some tremendous investment opportunities and there's going to be some pitfalls. And I love what you just said on boom and bust, because I can look at every portfolio that we run right now. And if we just did an x-ray on them, there's boom and bust in everyone right now, right? Every time we hire a really good money managers too, right? If they're buying 100 things, there's not 100 home runs in there.
Mm-hmm. Yeah, definitely. Diversification matters. Making sure we don't only invest in tech, that we are exposed to other parts of the market. Energy has done fantastic this year, right? So there's other things in the US market that are working, and there's a lot of things in the international and emerging markets that are also really attractive. And we've known this for a while, that those were underinvested in tech, but they have opportunities to perform and catch up, maybe not catch up to what the US has done, but to be good investment opportunities outside of the tech world. So there's, that is a fundamental tenet of how we're making sure we manage money at any time, is diversification matters. Concentration risk can kill. And so be cognizant of that.
Right. Well, taking a lot of time today, Matt. We could talk about this for a long time. We probably will in the future again. And I think we'll get one of these out again before the holidays. There's anything top of mind that you think is going to be something we're going to talk about in the next couple of weeks, or are we just going to kind of wait and see what happens?
Yeah, no, I'm not sure yet what the next one should be on.
I know there's going to be some stuff because there's a lot of stuff going on right now.
Yes.
And there's already people complaining about the lack of a Santa Claus rally, and that was on, the 1st. So it's an exciting time. And again, I'll close by saying that I am a bull on AI. I really hope I think it can do some really amazing things. And we outlined a lot of things today where it doesn't have to be this really, really bad thing. In fact, it could be really wonderful if it's handled right. And we'll keep an eye on all that stuff. So look forward to speaking again in a couple of weeks.
Sounds good, Steve.